Hi, I am Cara. Welcome to my new channel where we discuss all the latest news surrounding XRP and Ripple. If you're new here, please hit that subscribe button and turn on notifications so you never miss an update. As the channel is new, I would really appreciate that. All right, we need to talk about what's happening with XRP right now because the data is actually pretty bullish. XRP ETFs just crossed $1.3 billion in total inflows. Exchange balances are at 8-year lows, and analysts are starting to call for some serious price targets this year. Let's break down what's actually going on. Let's start with the ETF news because this is genuinely impressive. XRP ETFs have attracted over $1.3 billion in just 50 days since launching in mid-November. Think about that. 50 days, $1.3 billion. That makes XRP the second fastest crypto ETF to cross the billion-dollar threshold after Bitcoin. And here's what's interesting. While Bitcoin and Ethereum ETFs were bleeding money in December, XRP ETFs kept seeing inflows. XRP ETFs saw $483 million in inflows in December alone, while Bitcoin lost $1 billion and Ethereum lost $564 million. Retail was selling, institutions were buying. That's a pattern we've seen before, and it usually doesn't last long. Eventually, either institutions stop buying or the price catches up to reflect the demand. Right now, it looks like we're in the second camp. Since their inception in November, XRP ETFs have attracted $1.3 billion in net assets and $1.18 billion in net inflows. And they had 43 consecutive days of positive inflows with 0 outflows. That's institutional commitment, not retail gambling. The fact that major players like Franklin Templeton, Bitwise, and Canary Capital are leading these inflows shows this isn't just hype. These are serious institutional investors making serious allocations to XRP. Now let's talk about supply because this is where it gets really interesting. XRP balances on exchanges have fallen to their lowest levels in years. Some reports are saying 8-year lows. What does that mean? When XRP leaves exchanges, it means people are moving it into cold storage, long-term holding. Less supply available on exchanges means less selling pressure, and when demand stays constant or increases, price has to adjust upward. This is basic economics. We're seeing steady institutional demand through ETFs, that's the demand side. At the same time, exchange supply is shrinking, that's the supply side. When those two things happen together, historically it's supported price appreciation. And this isn't just a short-term thing. The trend of XRP moving off exchanges has been building for months. That suggests long-term holders are accumulating and not planning to sell anytime soon. Now let's talk price. XRP is currently trading around $2.09, holding steady after pulling back from the $2.40 high we hit earlier this month. We're still up about 13% year-to-date, which is solid. But here's where it gets interesting. Analysts are starting to put out some serious price targets for 2026. Some analysts, including those at Standard Chartered, project XRP could reach the $7 to $8 range this year, some even saying as high as $20, citing ETF adoption, regulatory clarity, and institutional participation. Now, I'm not going to sit here and tell you XRP is definitely hitting $8 or even $20 this year. Nobody knows that. But the setup is there, and I am certainly bullish. If institutions keep absorbing supply at December's pace, XRP ETFs could accumulate over $5.8 billion by year-end. That would represent a significant portion of the circulating supply. The key levels to watch right now are $2.28 on the upside. A clean break above that level would be bullish. On the downside, we need to hold $2. As long as we stay above $2, the structure stays intact. Some analysts are even calling for $4 as a realistic target over the next few months if institutional demand continues. Doubling from $2 to $4 is achievable given supply dynamics reshaping XRP's market structure. And we can't ignore what Ripple is doing as a company. Ripple secured approval of an electronic money institution license and crypto asset registration from the UK's Financial Conduct Authority. That's a major regulatory milestone that opens up the entire UK market for regulated digital asset payments. Add that to their licenses in Singapore, Dubai, and the US banking charter they're pursuing, and you've got one of the most comprehensively licensed crypto companies in the world. Ripple has signaled that 2026 will focus on scaling usage beyond pilot phases, particularly in high-volume regions. Translation? They're moving from testing to actual production deployment of XRP-powered payment corridors. This is exactly what needs to happen for XRP to justify higher valuations. Pilots are nice, but real recurring transaction volume is what creates sustained demand for the token. So what's my take on all of this? The fundamental setup for XRP right now is genuinely strong. You've got institutional demand through ETFs, tightening supply on exchanges, major protocol upgrades coming to XRPL, regulatory licenses piling up, and Ripple focusing on scaling actual usage. The ETF numbers are particularly impressive. 1.3 billion in 50 days, with 43 consecutive days of inflows, shows real, sustained institutional interest. That's not retail FOMO. That's serious money making serious allocations. The supply side is equally important. 8-year lows on exchange balances means the XRP that's available to sell is shrinking. When supply tightens and demand increases, price has to respond eventually. And the XRPL upgrades are a big deal. Adding DeFi lending, privacy features, and programmability expands the use cases for XRP way beyond just payments. More utility means more demand for the token. Now, does that mean we're going straight to $4 or $8? Not necessarily. Markets don't move in straight lines. We could consolidate here for a while. We could pull back to $1.90 before the next leg up. But the trend is clear. Institutional adoption is growing, supply is tightening, the technology is expanding, Ripple is executing on their vision, and the regulatory environment is improving. Those are the fundamentals that drive long-term price appreciation. Short-term volatility, sure, but long-term trajectory, looking bullish. That's it for today's update. XRP ETFs crushing it with 1.3 billion in inflows. Exchange supply at 8-year lows. Major XRPL protocol upgrades coming with DeFi lending and privacy features, and analysts targeting $4 to $8 for 2026. What do you think? Are we finally seeing the institutional adoption everyone's been talking about? Or is this just another false start? Drop your thoughts in the comments. And if this was helpful, hit that thumbs up and subscribe for daily XRP updates with no BS. I'm Cara, and I'll see you in the next one.